this and the future of digital advertising. And I'm joined by Thomas Hayes. He's the founder and chairman and managing member of the Great Hill Capital. Welcome to the show, and good to see you. This has what, been 3 weeks of this? I mean, Twitter had these issues, and then Musk came to the rescue, and then the controversy began, and then the I might not buy it. But the last thing I saw earlier today was that it's back on again. What's going on?
Yeah, well, after the close failed, there was a filing that Musk had increased his equity financing by $6.25 billion up to $33.5 billion. The deal is for $44 billion, and I'm going to tell you right here, Phil, I don't think it's getting done at $44 billion, and the reason is Elon Musk now has the company boxed. Elon Musk recently said that he believes at least on the low end, 20% of the 229 million accounts are fake, spam, or bots. And what he can do now is go back to the company and say, I'm going to give you a lower price and you're going to take it. And the reason the company's going to take it is because they don't want to be found out in discovery by an external audit that more than 5% of the users are in fact bots, because they've been publicly filing and certifying with the SEC and public company investors for many years that less than 5% were bots. And if it's found out that more than 5% are bots in discovery, they could have a serious lawsuit on their hands.
I want to give us an opportunity to explain what a bot is, because I'm going to let you do it. It's crazy. For those who don't know what the bots are, I'll let you explain.
Yeah, bots are basically fake accounts that are put together by spammers, people trying to get either commercial messages across or political messages across in large scale, done through computers that don't really have a human behind them. They're just massive accounts that are created for that sole purpose, to drive an agenda, to drive a commercial agenda, et cetera, versus if accounts became authenticated, i.e. you had to submit a driver's license or a passport in order to get your account verified, you wouldn't have this type of behavior and things that have led Twitter to be somewhat unsavory, or at least perceived that way, and I think Musk has the ability to clean that up. So effectively, Musk can go back and name any price, because the last thing that this board is going to want to do is go to court.
So I'm going to tell you a secret, Thomas. You ready?
Yes.
So I have a lot of friends that are very well dressed that hit me up on Facebook. And they don't say they're a bot because they have proper names, but it sure feels like a bot. It's not just Twitter, right? I mean, all these companies all have issues with fake accounts who will try to ping you or ping me to be friends, and then they have something to sell us.
Yeah, well, you know, I'm sure there is a percentage in all these different companies. I think it's a little bit harder on Facebook in terms of how they verify and how they have connections with friends, et cetera. But certainly I'm sure there's a level of this on everything. But the key is certifying in a public document filing. That's a no-no. If you don't have absolute certainty, you cannot put that in the filing, and the officers who sign those filings could be personally liable, as well as the board, for signing off on those filings. So the last thing they want to do is have an external audit. And you saw the CEO come out, Parag Agrawal, on Twitter saying, well, we don't believe that an estimation can be performed externally, given the critical need to use both public and private information, which we can't share. You can't share that, but you share it with advertisers, number one. Number two, the court will compel you to share it. So effectively, Musk can go in and say, look, you know, it's 25%, it's 30%. The company will say, that's crazy. They'll wind up at 20%. I think what happens is you wind up at $42 a share, 420.
So I get it. He wants a better deal.
Yes.
We get it. Let me take a slight right turn here for a minute.
Shoot.
And talk about digital advertising, because it also leads to what are really your customers are really worth, because I'm advertising to your customers. And you've seen Facebook be very cautious, Google be very cautious. I think we saw Snap the other day. Digital advertising is in question. What's really going on?
Okay, this is a great question, Phil. I think what you saw from Snap, they're taking down of the guidance and the stock collapsing over 40% in a day. I think this has given Musk all the leverage he needs to make a move right now. Twitter is vulnerable. The board is vulnerable. They got to take whatever he gives them. And here's going to be how it plays out. Shareholders are going to say, you're not getting this company for $42. And what he's going to come back and say is, well, then roll in your shares with me, because that was in the public filing tonight. He's going to look for shareholders to come in with him to lower his price. And he's going to wind up, when all is said and done, he's going to have control of this asset for $20 billion. And he's going to run the thing for $20 billion, which is lunch money for Elon Musk. And that's how this is going to play out. I do think Snap was more of a one-off. I don't think you're going to see that type of precipitous drop in guidance from Meta Platforms or some of the others, but it certainly gave him timely leverage to move ahead with his deal in the way he wants it.
Thomas, we're going to have you back when he makes that new bid. Let's see how it plays out in the next couple of days here. Thank you very much.
Thanks, Phil.
All right.